Hi everyone, I am Adam from Trade with Precision and welcome to this week's episode of Inside the Charts. I'm starting off here with the dollar index, which is obviously the biggest cog in the system. Really want to just show you that, first of all, within the purple box, it has been largely range bound going back to 2022, early 2023. We've recently had an attempt to break out of that, so I'm just going to zoom in here and show you this. And we see prices pull back within that range. However, what I'm looking for here is it's testing support around the 105.50 level. I'm looking to see if it is going to find some support this week, potentially continue out. If I have a look at it from a monthly perspective, although this does show a rejection, it's not uncommon to see the following candle continue to push up in this case. So that is something that I'm going to keep an eye out for that. But when we look at it from a daily perspective, we've actually broken this previous uptrend. The price was relatively overextended. We never had a decent retracement all the way up from the bottom of the range to the top of the range. Quite a big move. We never had that. We've broken the lows now. So this uptrend is now broken. So at the same time, this has now shifted to a weekly retracement. And really what I would normally be expecting is for price to head back down, at least down towards, say, a 382 or a 50 fib retracement, or even a 618, 62% retracement. So be looking for that. So there is very much a fair possibility here we might find some resistance, and instead of breaking out of the range, continuing to move back out of the range, we might find ourselves coming back further in. So having a look at euro dollar on a similar type of approach. This box here showing you the general area of the range. We failed to break out. Price came back within the range. It's now sitting above support at 105, 1.05, and the potential here for a correction back up to at least 1.06, 106, 107 is very much on the table for me this week. Looking for that to potentially do a retracement before continuing down. When we go down to the lower time, the daily here, excuse me, you can see we haven't quite broken that trend. So the euro dollar here looking essentially looking weaker than the rest of the pairs, and therefore wouldn't completely surprise me if we saw price attempting to move. So it's very much a fork in the road as to whether this will be a successful break out of that range. I must say the dollar index is looking particularly strong at the moment. Euro is looking particularly weak. But when we have a look at a few of the other charts, for example, we look at cable. Let's take this up to a monthly time frame, and here you'll actually see that it continues to produce a series of higher lows and higher highs. So cable looking a little bit stronger relative to the euro dollar. So wouldn't be surprised to see if that continues to head high. Looking at Aussie dollar as well, this has got a very strong level of support. And in fact, the price action behavior here is a little bit more bullish. We've got a little bit of bullish divergence on the indicators. Price actually rejecting this level twice. So really at this point, this looking as though the potential for this to move higher is a little bit stronger here. Let's compare that with dollar yen, which always bucks the trend, does very much what it wants to do. So we do know that the Bank of Japan really would prefer for dollar yen to sit below that 150 level. So let me just place that level in there. They would really prefer for price to be sitting below that level. And so you can see that strong rejection candle from the month of November. And so right now we are sitting below that level. Should price continue down, which is very much what I expect will happen, then it would be an indication of a weaker US dollar, which would support the idea of price moving back into the range. Then if we have a look at dollar Swissy, so dollar Swissy looking slightly different here. This has actually produced a very nice, well, especially if I go up to the monthly, we've got a very nice double bottom here. We've got a little bit of bullish divergence here. Dollar Swissy itself actually looking relatively strong, so supporting the idea of a stronger dollar. So you can see how we're getting these mixed signals here. In this case, however, I do think it's actually the weaker Swiss as opposed to the stronger dollar. Then having a look at dollar CAD. Again, this one is interesting because when you go from a monthly perspective, you can see one of the key differences here is that dollar CAD has actually successfully managed to break outside of this range. Let me just zoom in and show you that from a little bit closer up. Has actually managed to break out of the range, continues to push higher, which supports the idea of a stronger dollar and a weaker CAD. When we have a look at it from a daily perspective, we can see a strong rejection here. So interesting, again, we've got price kind of finding some strong rejection here. We've got a bit of bearish divergence, hinting that we might see dollar CAD head back in a little bit. So it's interesting seeing on the different time frames, we are getting those contradicting messages. And we're going to have to see how that plays out. Let's move on and have a quick look at gold. So a couple of things we do know. We know that gold is effectively in a bubble. This is one of the biggest moves that I've seen it do since 2011, which is the last time it was in a bubble. We can see that it has produced a swing high. So we've got that break of the low. We've got a bearish candle. A lot of bullish buyers below that, meaning there's a lot of buyers below this, but not enough above here to keep it going. So the very strong probability of price actually doing a deeper correction. When we have a look at it from a weekly perspective, there is no clear trend at this time. Well, it's still producing higher lows and higher highs. And yes, actually, technically, as long as it can kind of stay above this level over here, stay above 2535, that uptrend is still technically intact. When we go to the daily, we lose our trend. We recently had a downtrend. We had an uptrend prior to that. We broke through that. Price has attempted to rally and is stuck effectively. I'll just mark these two areas. So we're stuck with price being stuck between that level and stuck between this level. So what we're looking for this week ideally is a sign, and the weight tends to lean towards this breaking to the downside. And if it does break towards the downside, let's go back up to the weekly so you can see those levels a lot more clearly. We've got that potential to have a correction down towards 2,000 potentially, or at least down towards these highs here around 2,100, if not just a simple correction down towards 2,300. So gold is very hot at the moment, really does need to relax and release some of that buying pressure. Let's have a quick look at crude oil. So when we have a look at it on the monthly time frame, we can see that we've got a series of lower highs here building into that bearish pattern, a bearish breakout pattern. And if it's been built up and building up for a very long period of time, it's likely that when it does break through, if it does break through the downside, it is likely to do quite a big move, which means that we could see it head down towards $51 or potentially down towards $42, $43. On the other hand, if we have a look at it from a weekly perspective, if we break upwards, break these previous highs and break up through this downward sloping trend line, that will negate that. But the pressure and the pattern certainly looks as though that is the direction in which it is going. And of course, this breakout can happen anywhere between now and sort of potentially April, May next year. So I expect it to happen before then, maybe a kickoff in the new year. The indicators, both indicators, momentum indicators are leaning bearish, so actually the pressure very much is to the downside, and it wouldn't surprise me to see it break lower. So let's quickly wrap up with the global indices. Global indices here are looking very, very nice and bullish when we have a look at it from a monthly perspective. It's not ridiculously overextended. We just reconnected with them in August with the moving averages. We're heading away. We're starting to head far enough away from the moving averages, but it's not completely crazy. When I have a look at it from a monthly perspective, we're sort of at the top of the channel here, moving away. So a kind of a correction anytime now would make sense. However, what I would say is when I have a look at it on the daily, both the indicators, the RSI and the MACD, are trending higher, meaning they're very nice and happy and healthy and bullish, which means if we do get a pullback into this area, in towards the moving averages, I would be looking for positions to continue that move to the upside. And in fact, the same analysis applies to the S&P 500 as well as to the NASDAQ, very much producing the same type of setups and signals. Not too worried about that. The Russell 2000, which is just a great sample size, also producing a very nice little bullish setup here. This is a breakout and a retest, not looking too overextended. So for these, I am generally nice and bullish. However, the only concern I have, and I'm going to mention it now just so that we can start to keep in mind that's going to happen, is especially if you look at markets from a monthly perspective, you can see that the angle of momentum of price has actually started to accelerate. So it's almost gone parabolic. And what does that mean? It means that we're starting, although we are in a bull market, and we've got plenty of time in theory for a bull market, we've also started to accelerate upwards, which starts to lean towards parabolic, which starts to hint at a bubble. So what does it mean? It means that true value for this market lies closer towards where the 50-period moving average is. So at some point, I do expect price to correct back down here, but the thing is that could happen a year from now. So I'm going to continue to keep an eye out for that, look for those kinds of signals. For now, the market is actually bullish and very happy and very healthy, but certainly in the early stages of forming a bubble. I'm going to leave you with that. Have a fantastic week. Thank you very much.